thank you so much for joining Bloomberg Television. We're here at the OPEC seminar, and the big topic of discussions, or at least one of them, was the fact that the OPEC Plus group have decided to start bringing back extra barrels to the market, unwinding some of the voluntary cuts introduced a couple of years ago. How is that going to impact KPC's production?
Well, OPEC Plus is accelerating the unwinding of those cuts, and that is an indication that the market today is balanced, if not skewed towards relative tightness. We're seeing that through our own interactions with our business partners around the world, where they are asking for additional barrels if we have those barrels available. So the ability to supply into a market that continues to show strength and growth is a position that we find ourselves in at KPC, and we have the production capacity to supply that market.
Is it your expectation that they will continue supplying more barrels to the market? Because once this basket is done, there's obviously another round of voluntary cuts that perhaps could be unwound in coming months as well.
Thankfully, I don't do OPEC policy, but we implement the reaction into the market. So we're really seeing a market that will continue to grow. We're seeing it probably from anywhere between 1 million to 1.3 million of additional demand growth over the year, with the supply growth perhaps matching that, but not necessarily. So we're really seeing some potential tightness in the market, and it's giving us an opportunity to capture market share into the future.
Interesting, yeah. So building up on some of those comments, we heard from energy CEOs just now on one of the panels. BP CEO was saying there's healthy demand in oil. They see growth of 1%. Shell CEO also talking about fundamentals being tight. You also talk about tightness in the market as of now. Do you think that it's going to look the same in a couple of months' time?
Certainly the summer driving season always gives a lot of tightness into the market. But if you notice that OPEC Plus's decision to increase production, an acceleration of that unwinding, really starts hitting in August. And that's towards the end. By the time those barrels really hit refineries, it's the end of the summer driving season.
Yeah.
So it is actually an indication that this demand growth is persistent beyond just that summer season. So we're really seeing that stretch into the fall.
From your perspective, where is the biggest demand coming from? Is it mostly Asia?
It continues to be Asia.
Yeah.
But we're seeing actually a strong demand for refined products, even in Europe. KPC is one of the largest suppliers of jet fuel into Europe and diesel. So the middle distillates market is actually quite strong in Europe. Jet fuel growth has been strong across the sector, and the crude supply and crude demand growth in Asia remains strong.
Do you see a window of opportunity now to perhaps ink some more long-term supply deals with some of your partners in Asia, including China and India?
We just did. We signed just recently this year. We signed a 300,000 barrel a day supply agreement with one of our largest Chinese customers. That's 10 for 10 years. So when you're looking at a business partner who's requesting 300,000 barrels of, that's more than 10% of Kuwait's production, requesting that for 10 years to come, it's an indication that that customer is not concerned about a peaking in demand, certainly in China, and also is looking towards quality of the supplier, and that is us, because we are committed to a low-cost and low-carbon intensity barrel into the future, and will continue for decades to come.
Is that how you remain competitive with all of these extra barrels coming to the market? And I'm not just talking about OPEC, I'm talking about the growth in non-OPEC supply as well.
What keeps us competitive with others is actually the strong business sense that KPC has had for decades. We work with our customers where when they face hiccups, we're there to help and accommodate them. And the same usually happens when we face potential hiccups. Most recently with security situation in the Gulf, we worked very well with our customers around the world to make sure that their supplies were available whenever they needed them.
How are you feeling about the geopolitical situation right now in the region? And I know so much of the geopolitical premium has come out of the price of oil, but still a potential episode like this could flare up at some point again in the future. How do you see things?
Unfortunately, I've been around in this business long enough to have seen almost every single day in this region have some sort of a security premium or risk associated with it. If you go back to the 1980s, it was the Iran-Iraq War, then obviously the Iraqi invasion of Kuwait, followed by continued sanctions and whatnot. So it is always a region that faces security risk and a security premium. However, it's very important to note, for over 8 decades of oil flowing through the Strait of Hormuz, not a single day has that strait ever been closed physically to traffic. But it has been threatened. And that's where we work on our contingency plans with our partners around the world. And that's where we have now stored crude oil in other parts of the world to make that available to our customer base.
Let's talk about some of KPC's expansion plans. Do you plan to work with more of the international IOCs and some of your North Fields?
We do, not necessarily just in the North Fields. We're looking at the opportunity to partner with international companies throughout the upstream business. However, maintaining our constitutional prohibition on foreign ownership of the resources. So the resources will always remain owned by the state of Kuwait. But we are working on a potential new model. We are not yet ready to unveil it. Once we are, we will certainly share that.
Okay. Would it require a change in lawmaking, perhaps?
We don't envision that it will require a legislation at this point, but we're still in the process of looking at the model.
Okay. Earlier on, you touched on the importance of your global refinery, and that some of the interest, some of the demand is coming from Europe as well. Talk to me about the importance of your refining capacity expansion, specifically in Al-Zour.
Well, we have a refining capacity in Kuwait now of 1.4 million barrels a day. Compare that to our current production allocation of about 2.5 million barrels. So, and we're moving that 1.4 to 1.6. So we are refining quite a bit of the oil that we produce in Kuwait, more than half of it. That puts us in a position to capture opportunities further down the value chain. Zohr refinery in Kuwait, 615,000 barrel a day refinery. It's one of the largest refineries in the world. It is heavily suited to heavily produce the middle distillates, which, as I said, is under heavy demand worldwide. So the middle distillate market remains strong. Zohr refinery is well equipped to supply into that market. And that is, it's given us opportunities really to capture market share, especially, for example, in Europe, where we are right now. If you remember a couple of years ago, when there was a shortage in energy supplies into Europe, we were there with diesel. We were there with the middle distillates that kept Europe warm through a very cold winter.
Yeah, and I also just want to ask where LNG fits into the picture as well, what ambitions you have in that space.
Our domestically produced gas is going to be used for domestic consumption, whether it's in power generation or hopefully more likely in petrochemical manufacturing. We continue to import LNG, and we have a substantial LNG import facility which has quite a bit more ullage available. And we're exploring whether we use that for storage capacity or we can find other markets to open into.
Okay. Thank you so much.
Pleasure.